Jeremy Allaire is an American-born technologist and internet entrepreneur. He is the CEO and founder of the digital currency company Circle and chairman of the board of Bright Cove. He shared his views about the popular sentiment in the U.S. market about crypto regulation. There is a feeling of anxiousness about what the rules will be. Allaire also shared the advantage that comes with digital assets in that they are global in nature and attract interest globally. The Circle CEO explained how several countries in the European Union and Asia have advanced their scope of regulatory guidelines for the crypto industry. Jeremy also points out that SEC is not the right regulator for stablecoins and suggested that a different stream of regulators who doesn't have a negative bias towards cryptocurrency should take over regulation. The CEO said the need for crypto is fueled by the current macroeconomic scenario with rising interest rates along with the lure of having a currency independent of governments. Despite increasing regulatory pressure around the crypto market, the U.S. administration is far from providing a clear and distinct view. This is amid increasing interest from new entrants into the cryptocurrency ecosystem, not just in the U.S. but globally. This is leading to fear and uncertainty among the country's leading crypto players who fear the U.S. is risking the possibility of missing the bus to become a top crypto hub. However, unlike its supremacy in the world of financial markets, the decentralized nature of cryptocurrencies lays the path for smoother adoption in other countries. As we go into the video properly, make sure to give us a like, subscribe, and make sure to drop your comments below. Enjoy.
I think what you're certainly seeing is that, just like with big tech and tech, there were, names that, on the NASDAQ that sold off significantly. And then people sort of say, okay, where are the long-term platforms? And there tends to be, some higher degree of confidence in that. And so, Bitcoin is sort of here to stay. Ethereum as a platform people are building on is here to stay. You've seen that. Notably, we also saw, all of last year during the carnage, while, all of these digital assets were down so much, USDC actually grew. It was one of the only assets that grew in 2022. And so a digital dollar that works on top of these blockchain networks has real utility and real value. It maybe gives us somewhat of an indicator into where does the utility come from as we go forward. To some degree, there is a kind of, there's an anxiousness, like, okay, what are the rules going to be, or what, how do we get through that? I think the other piece to this, though, is I think it's very easy to get kind of grounded in a very U.S.-centric view of the world. What are the U.S. regulators doing? What's happening in U.S. markets? But as we know, digital assets are extraordinarily global. The demand and interest in them comes from highly global audiences. And in fact, when you think about the drivers in many cases, rising interest rates, a strong dollar is actually disruptive to many currencies, sovereign debt issuers, geopolitical uncertainty also increasing. And so the kind of conditions within which one would be interested in a non-sovereign digital commodity is still there.
Jeremy Allaire recently shared some interesting thoughts on the Securities and Exchange Commission, SEC, and its relationship with stablecoins in the United States. Circle is the issuer of the world's second-largest stablecoin, USD coin, USDC, which has a circulating supply of over $42 billion. In a recent interview with Bloomberg, Allaire stated that according to him, the SEC is not the right agency to regulate stable coins in the U.S. To make his case, the CEO cited the stance of governments around the world, including the U.S., which is that payment stable coins are a payment system and banking regulator activity. He essentially indicated that banking regulators such as the U.S. Federal Reserve Board or the Office of Comptroller of the Currency, OCC, may be more appropriate for stable coins. IRA allow you to save for retirement in a tax-advantaged way for greater financial security with lots of tax advantages. But most IRA offer the same boring stocks and bonds. Introducing iTrust.capital, the #1 crypto IRA platform in America. iTrust.capital allows cryptocurrency investors like you to enjoy all the exciting benefits of tax-advantaged retirement accounts. It combines the traditional IRA with the new, exciting world of cryptocurrencies. Why should you use iTrust.capital? It is the best crypto retirement platform in America, with some of the lowest fees of any cryptocurrency IRA platform. It gives investors adequate exposure to some of the top cryptocurrencies like Bitcoin, Ethereum, Cardano, Solana, and Polkadot. You can buy and sell all your favorite crypto assets while enjoying amazing tax-free gains. It is adequately secured by Coinbase custody with a $320 million insurance to protect against theft. You can easily roll over an existing retirement account or begin a new one when you register on iTrust.capital. iTrust.capital is the trusted crypto IRA for many American investors who love the crypto industry. To join the millions of Americans who use the platform, please click on the link in the description box below. The SEC has been accused by many in the industry of overreaching its jurisdiction and regulating by enforcement in a bid to extend its oversight of the crypto industry. The securities regulator recently issued a Wells notice to Circle's rival stablecoin firm Paxos, which primarily issued the world's third-largest stablecoin Binance USD, BUSD, until a few days ago. The notice informed the firm about the SEC's intention to initiate enforcement actions. The Circle CEO clarified that while he felt differently about stablecoin regulation by the SEC, he was on board with the regulator's proposal to include virtual currencies in the assets that are subject to qualified custodian requirements. Allaire believes that this can provide the appropriate control structures and bankruptcy protection. On February 13, the United States Securities and Exchange Commission issued a Wells notice to Paxos, alleging that BUSD is unregistered security. On the same day, the New York Department of Financial Services ordered Paxos to halt the issuance of BUSD. As Paxos faces regulatory scrutiny on several fronts, various members of the crypto community took to Twitter to give their takes on the situation. From disregarding the issue as FUD to calling it an attack against the Binance exchange, crypto community members laid down various theories on the allegations that BUSD is unregistered security. Crypto analyst Miles Deutscher expressed his thoughts in a tweet, arguing that nobody expects profit when purchasing a stable coin. He tweeted, "The SEC has labeled BUSD as an unregistered security and is suing its issuer Paxos. But how on earth is a stable coin considered a security when it clearly doesn't meet the Howey test criteria? No one has ever had the expectation of profit when buying BUSD." Similarly, the pseudonymous trader Tree of Alpha was baffled by the new development. The community member questioned how it was considered security and asked their followers if it were buying BUSD with the expectation that it would go to $2. The trader also called out the SEC chairperson Gary Gensler and said that the government official is on an unhinged, unchecked crusade against crypto. Regardless of the regulations, Jeremy believes that Bitcoin and Ether are here to stay and nothing can change that. What do you think about this? Do you think his convictions are right, and what do you think about the SEC? Let us know your thoughts in the comments section. Also, ensure to give us a like, subscribe, and turn on notifications. Thanks for watching.